great numbers, great quarters. Where is the growth coming from?
Well, Rich, great to see you again. It is indeed a very strong start of the year. It is the result of 3 years of effort to try to capture the biggest opportunity throughout Asia. We have invested heavily in digitizing our consumer business. We have focused our institutional business in the Asia-to-Asia flows, in the equity business, and truly being the preeminent network bank for our clients around the world.
Oh, you would say preeminent.
Absolutely.
Yeah.
And particularly serving our clients as the strongest network certainly across Asia. And what we're seeing is that client momentum is very, very strong in our wealth management business as well. Activity across the region, extremely strong across the different countries. So this is true client-led growth.
Sure. Geographically speaking, what are we looking at here as well? Who's the biggest contributors? And do you expect them to be the biggest contributors looking ahead?
Well, certainly we have 16 countries that we serve in Asia and 5 markets, 5 consumer markets in EMEA that we cover from Asia. And what we have seen is that all countries are contributing quite strongly to our results, which is, as I said, very much client-led. Within that, we have 5 very large markets like Hong Kong, like Taiwan, like India, Australia, performing extremely well, Singapore doing extremely well. But in essence, is a true network growth momentum reflecting our clients' activity.
China, of course, is in there. You have a joint venture there with Orient. Now, the thing is, they're opening all that up. Do you take control of that joint venture, given the reforms taking place now?
Well, first and foremost, we welcome the reforms and we welcome the opening, the consistent opening of the Chinese economy. We have a great joint venture. It's the most profitable joint venture out there in China. And at this point, we're not reconsidering our positioning vis-a-vis the joint venture. We are, however, very committed to the Chinese market. We've been there since 1902. And we're extremely proud of our deployment there. We have almost 10,000 people in China, covering both our institutional business and our consumer business. And we're extremely committed to continue to invest in China as opportunities arise. And certainly this is another opportunity to continue to grow our business there.
Citi has also been pretty active when it comes to Belt and Road. Speaking of China, of course, both on the mainland and across the broader Belt and Road project. What's sort of in the pipeline for you guys, and what is, I suppose, some of the challenges as well?
Well, Heidi, thank you, and good to see you again. What we see is a tremendous opportunity in what we've defined internally as the Asia-to-Asia opportunity, which is certainly driven by capital movement and trade growth within Asia. And certainly Belt and Road is a tremendous contributor to further growth within those flows. We are serving clients in 52 of the 65 Belt and Road countries, directly present in 38 of those. So it is for us certainly playing to our strength in terms of facilitating and enabling trade and capital movement around the region. We see a lot of focus on those opportunities. As I go and travel around the region, what I see is that our clients and governments are extremely focused in leveraging on the Belt and Road opportunity.
In terms of what that actually materializes as in your China strategy, how much of it is actually bricks and mortar? Because the number of the branches that you guys have actually fell by about a third in the final quarter of 2017. Are you expecting a further shift away from that?
Yes, we have accelerated our digitization of our consumer business, reflective of our clients' drive towards mobile connectivity and engagement with us. And what we've seen is a consistent reduction of our brick and mortar branches and increasing our capabilities digitally across the region. We went open architecture 3 years ago, as we open almost 89 APIs right now, enabling open banking and trying to facilitate the partnership in the last mile in all of these 17 countries that we serve consumer clients around the region in a way that we become extremely relevant and contextual to our consumer clients as they engage with their lifestyle and ecosystems locally. We become extremely relevant to their transactions on a day-to-day basis through these partnerships.
So what you have is a situation where these brick and mortar outlets, you reduce those. You're going to be hiring, of course, people from the e-platform side of things. But then again, you're also losing jobs on those branches. They're not equivalent because they're in the business of making money ultimately. So how many jobs are going and how many will go, in your view, in this part of the world?
Our driver is really improving the customer experience and the customer engagement.
Absolutely.
And as a result of that, we are leveraging technology to the maximum of our ability to try also to drive efficiency in our results. So what we're seeing is, at this point, the drive to move from a physical footprint to a digital footprint hasn't really impacted headcount that much, as we have really, particularly the relationship management and coverage side of things, we've moved to hubs. And what we're doing is improving the quality of coverage and service we provide to our wealth management clients through that platform rather than through a branch-driven connectivity point. Eventually, that will lead to further efficiency in headcount. We are, of course, in the process of retraining our staff to try to move them and progress them throughout the organization. But we are driven by efficiency, and it is one of our commitments to our investors as stakeholders out there.
What gains in your bottom line are you already seeing from digitization very quickly? And how do you make provisions indeed for that headcount loss?
Well, it's a fundamental driver of our growth. When you see our performance, for example, on credit card origination, right now is close to 40% digitally originated. When you look at our personal loans, is right now 47% digitally originated. That's 76% growth year on year in terms of how we're originating personal loans. Because today they are contextual, they're relevant to your everyday needs, and come up in offers that are relevant and contextual to your transactions every single day. So that is the difference between a analog footprint and a digital connectivity and engagement with our clients. And that growth will definitely go all the way through the bottom line, as we are seeing in the first quarter of this year.